JP Morgan is obviously one of the biggest and most successful banks in the world, and Jamie Dimon has been the CEO of that bank for almost 2 decades at this point. He and JP Morgan are forever intertwined, and he has become an institution himself as one of the most successful bankers alive. Recently, though, he's come out and said a few worrying things, and unfortunately, there's a fair bit of dishonesty going on here too, and frankly, I doubt he would want you to see this video. Today, we're going to be talking about the things that he's saying behind closed doors that he doesn't want you to see, but that I think we all actually really deserve to hear what he thinks, to have as much information at our fingertips to enable us to be more successful when it comes to investing. Now, 2 months ago, I put out a fairly successful video showing a talk that Jamie Dimon gave to some private JP Morgan investors, and that's linked down below in the description to this video if you missed it and you want to see it. The problem with that video, that speech that he gave, was that it wasn't public. For me to get access to that video to see what he actually said, I had to jump through a bunch of hoops and basically announce myself as a real legitimate financial journalist just to get access to his speech. You won't find that video on Bloomberg or CNBC or on YouTube or Twitter because it's pretty much been scrubbed from the internet, but he was talking directly to his biggest clients, to the billionaire clientele, which actually make JP Morgan the most of their money. Now, what he was saying, though, was really important, though, and I will show you all now just a short clip which encapsulates everything that he was saying on that day.
Look, I'm an optimist. I said there's storm clouds, they're big storm clouds, it's a hurricane. Right now it's kind of sunny, things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And you better brace yourself. So JP Morgan is bracing ourselves, and we're going to be very conservative in our balance sheet. With all this capital uncertainty, we're going to have to take actions. And I kind of want to shed non-operating deposits again, which we can do in size, to protect ourselves so we can serve clients in bad times. And so that's the environment we're dealing with. And I think it's okay to hope that'll end up okay. I hope it. That's my Goldilocks. I hope. Who the hell knows?
Needless to say, he wasn't very confident about the economy. He thinks hard times are coming for the United States in particular, and that the Federal Reserve and the US government as a whole is just not fit to deal with the problems that are mounting. He is personally directing his business to be cautious and conservative and to be responsible to ensure that JP Morgan can get through this recession without falling apart. This, though, is where things start to get seriously sinister. About 20 days after Jamie Dimon gave that speech, he gave that talk where he warned about an economic hurricane that was coming to destroy the entire economy, JP Morgan posted this report here for retail investors, which targets people like you and me because it's so readily available online. Basically, this is for the chumps that aren't private clients of JP Morgan. Now, what exactly does this article push, though? Well, this quote here summarizes it perfectly. If there is no recession, which is our view, then risky asset prices are too cheap. Many equity market segments are down 60 to 80%. Positioning and sentiment of investors is at multi-decade lows. So it is not that we think that the world and economies are in great shape, but just that an average investor expects an economic disaster. If that does not materialize, risky asset classes could recover most of their losses from the first half. Our bullish and out of consensus view is hence a forecast of a lost year, a recovery of H1 losses in risky assets. This is pretty much the polar opposite of what Jamie Dimon told his wealthiest clients just 20 days prior. Right there at the beginning of that quote, they said, if there is no recession, which is their view? They literally said in the first line of that quote that they do not believe a recession is coming, and yet behind closed doors, Jamie Dimon is telling his billionaire clientele that it's not a recession that's coming, it's an economic hurricane. Of course, though, this story doesn't stop there. More recently, just 2 weeks ago, JP Morgan published another piece talking about the market and the economy, and we saw the exact same thing happen there because this is a piece which normal people like you and I will actually find ourselves reading. We hear JP Morgan, we hear a billion-dollar institution, one of the biggest banks in the world, and we think that these billionaire bankers must know what's going on and that they're not lying to our faces. So what did they have to say this time round? Whether it's the earnings or the Fed, we see a reset of investor expectations. Last week's more dovish Fed meeting that saw the base rate raised close to neutral, along with softening inflation expectations and declining bond yields, indicate peak hawkishness is likely behind. Risk markets are rallying despite some disappointing data releases, indicating bad news is already anticipated or priced in. The big things there are peak hawkishness is already behind us. There's a reset of investor expectations, and the risk on market has already priced in all of the bad stuff that's happening. Once again, what we're seeing is JP Morgan trying to tell retail and normal investors that everything is okay, that the bull market is here, and it's time to make money. They're trying to invoke FOMO in you, the fear of missing out. They're trying to get honest, hardworking American people to invest everything they have into the markets. Now, this is, in fairness, about a month after that previous report, so maybe the situation seriously has changed. This is about 2 weeks old at this point, but unfortunately, that's not the case because this still goes directly against what Jamie Dimon is still telling his wealthy clients to this day. This is where everything starts to get so much worse. I mentioned earlier that basically we see good news being publicized as much as possible by JP Morgan, but the bad news they put out is as private as they can make it, and this takes that idea to a whole new level. About 3 days ago, we got news that came out of a private client phone call between Jamie Dimon and his biggest multi-billion-dollar investors. Now, unfortunately, we don't have any audio or video, but one of the clients who was on this call wrote down what happened and leaked it to the press. Once again, Jamie Dimon has been running around telling his billionaire clients something completely opposite to what JP Morgan is telling the retail trading crowd in public. This here is the real opinion of JP Morgan talking to the billionaires that actually make them rich. So what exactly did Jamie Dimon have to say this time around? Well, the most important bit is this highlighted here. The CEO was said to have estimated the chances of a soft landing to be around 10%, and the probability of a harder landing or a mild recession to be closer to 20 or 30%. He also reportedly estimated a 20 to 30% chance of a harder recession and a 20 to 30% chance of something worse. Basically, he's saying there's a 10% chance that there's no recession at all, and there's a 90% chance that actually things are going to get worse and the economy is not going to do well in the future. Along with that, there's an almost 30% chance of something worse than a recession, of which we know it's called a depression. If that happens, that will be the worst economy that the United States has seen in about 100 years since the Great Depression of the 1930s. With only a 10% chance that actually things turn out all right and we don't see a recession at all, that is not at all reiterated by what JP Morgan and Jamie Dimon is saying on the public stage. The difference between what they're actually publicizing themselves and what they're getting caught out saying in private is wildly different, but I don't think this is a mistake at all. I think this is entirely done on purpose. They are baiting the chumps into the market. They are baiting you and I to get caught up in these bull traps. They're publishing this stuff as much as they can to prey on our fear of missing out, at which point JP Morgan and all their billionaire clients will sell them their crap and leave us holding the bags. Why none of this is illegal, I really don't know. It should be market manipulation. I'm sure we can all agree with that, but sadly it isn't. And so we just have to work around that and be proactive. We have to ignore these analyst expectations and forget what they tell us they're going to do, and instead simply watch what they're actually doing. If JP Morgan tells me to buy stocks because they're about to explode upwards, but Jamie Dimon is selling every asset that he holds, then I don't think we should be paying attention at all to what they're saying, but instead to what they're doing. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Thank you all for watching. Stay stoic. Until next time.